Our discussion will be for Unit 10, 11 and 12. These three units are more related to the evidences. We will learn how to develop an approach if you want to apply the analytical procedure, substantive tests, and then if you want, how you can check the account receivable, account payable, and cash. Opposite to this, the purchases and the cash, the sales, credit sales and cash sales of the company. We'll start our discussion, Unit 10, Evidence, Objectives and Nature. In this chapter, we will learn what is the nature and sufficiency requirements, what is the definition, and what as an auditor we should know what we consider what is sufficient evidence, and what is the nature of the extent and timing of the transactions and the accounts. For the confirmation process, when we want to take the third party confirmation about some balance, auditor directly approach the debtors or creditors and they want some confirmation of the balances or some transactions. What should be the necessary procedure for the confirmation? What is positive confirmation? What is negative confirmation? What if there is no answer from the customer or from the suppliers, means account receivable and account payables? What could be the audit documentation that they have to maintain? Typically, as we know, the one audit file, broadly it has two portions. One is the permanent portion, one is the current portion. Permanent portion has those things which is like a permanent nature of the transaction. For example, the trade licenses, your long-term contracts, and current portion, as we know that for audit schedules, day-to-day working, your trial balances that you kept it for the working. And in the last we'll discuss in this unit the computer as an audit tool, because we know that we have computer assisted aided software, which should be called as CAD. That how advantageous these are, what are the disadvantages, what is the complication, what is required to apply these things. This we will discuss in the computer as an audit tool. Now, every auditor should obtain sufficient audit evidence by performing audit procedures to afford a reasonable basis from an opinion regarding the financial statements which are under consideration for the audit. This we have been repeatedly discussing, that auditor will express an opinion on the financial statements. He will express an opinion for the controls as per Sarbanes-Oxley guidelines. So for that he needs sufficient audit evidence. So what is an audit evidence? Audit evidence is all information used by auditor in arriving at the conclusion on which the audit opinion is based. Surely it is documented evidences which can be shown, which can be proved, which have authenticity in nature. And accounting, what are the accounting records? These are initial entries. It can be manual, it can be electronic. It may be a supporting document, that is checks and the EFTs, invoices, contract, and JV, journal entries, worksheets, spreadsheet, and the reconciliations. So these are some nature of the accounting records, but a lot of accounting records are there. Then some evidences can be achieved from the other sources, that can be the minutes of meeting, industry analysis, comparative control manuals. This will help the auditor for the analytical procedures, that you can compare yourself with the industry, what is the industry customs practice, what is the practice here in the company, is it logical or not. Then surely auditor is going to typically relies on persuasive rather than on convincing evidences. He should not be relying on the convincing of documents. They should be persuasive, which has a specific, definite, reliable information on that one. Auditor may consider the cost of obtaining evidences and its usefulness, because in audit always we have to see the cost and benefit relation. If the cost of an audit is higher, benefit is less, then according to the cost and benefit principle, it's not prudent to spend money on that one. Financial statements implicitly or explicitly include management assertions about the fair presentation of the information. Now we will discuss the assertion. What are the assertions? There are typical assertions that we are going to discuss in this chapter, and in the later units we will keep applying that one. For example, completeness, accuracy, valuation, measurement, disclosure, and cut-off. These are typical financial assertions that we have to see. That if it is a liability, what would be the financial assertion we have to check. If it is an asset, what financial assertions to be checked. Then for expense, income, shortly for equity, there are mainly 5 broader categories for balance sheet and income statements. So financial statements will be done like that. What is sufficiency? Sufficiency is the measure of quantity of evidence. The greater the risk of material misstatements, the more evidence it will be required. If you get more fear about the reliability of the information, surely you need a lot of evidences, and it will support your sufficient audit. Appropriateness by definition is the measure of quality of evidence. It is relevant and reliability of the evidence. Evidence is generally more reliable when it is obtained from independent sources. Now that's why when you are talking about account receivable, you are talking about accounts payable, the auditor will always prefer to directly send a confirmation letter to the parties. So the independent evaluation or the communication information sources are always most trusted. Then generated under effective internal controls. If your control system is effective, then it will be considered as the appropriate. Obtained directly by the auditor, exists in documentary form and consists of original document rather than on photocopies. Audit procedure for obtaining audit evidences. Now, as we know with our previous knowledge of this audit, that first step is the risk assessment. That in the planning stage we see where the entity stands, what is the risk of material mistake. Then supplement to that we test the test of controls. So these two things we are very much familiar. Substantive procedures are used to detect material misstatement at the relevant assertion levels. It can be an account level, it can be overall financial statements. Now, substantive procedures are of 2 types. One is the test of detail of transaction, that you can check each and every voucher, JVs, cash payment, cash received, bank payment, bank receipt, or fixed asset purchase vouchers, every kind of voucher. When you go in detailed testing, this is test of details. The other is analytical procedure. Analytical procedure is showing the analysis. Like you are comparing 2011 with 2010, you are comparing the change in sales over 5 years, you are comparing the sales with the cash, you are comparing sales with gross margins, sometimes with the net margin, sometimes with the receivables, movement of inventory or shipment. So in a linkage of certain variables, applying ratios for calculating the sales turnover and the sales profit margins, gross margins, and the sale utilization efficiency, debtors. turnover period, debtors, days outstanding in sales. These all variables, when you link, you get an approach that what is the quality of the information. Now, what are the types of audit procedures? Generally, inspection of the records. You personally inspect them, the tangible assets, you observe, and then you make inquiries for the information. Confirmation is very important. This will we keep discussing in this unit, that confirmation will make the information more authentic, because the outside party's confirmation is the top most reliable information in normal circumstances. Then recalculation of the certain arithmetical accuracies testing, reperformance. Sometimes you reperform the complete cycle, as we discussed, the walkthrough test, and we apply the analytical procedures. So broadly, if you see, every auditor uses inspection, observation. Observation is when it is an external audit, it's a year end, you go for the physical stock count, physical stock taking, you will count the stock, and someone will observe. Then inquiries asking from the management, confirmation, recalculation, reperformance, and an analytical procedure. These are practically used. Now, when you are using electronic devices and you are in the more IT environment, then surely documents are not placed in a traditional way, that you have voucher, then you have supporting documents. Then majorly the system auditor will be more helpful in that situation. For that, for example, transaction in electronic commerce may occur solely by the exchange of electronic messages. Then image processing system may convert document to the electronic images with no retention of the source document. And the auditor response may include performing audit procedure using CAD, that is computer assisted audit techniques. So in electronic environment, when you don't have trails, it's a direct online invoice, you didn't generate the PO, there is no receipt, GRN, there is no invoice, it's just one transaction, online things will be delivered. Shipping documents will be the same as we discussed previously. The first few procedure will be little change in the electronic environment.